Will interest rates hit 10%? Boy, that's a catchy line. I don't know. But we're going to find out. We've got our friend Jaclyn Scotch from Evergreen Home Loans with us today. My name is Seth Horst. This is my lovely wife, Kristen Horst, and we are with your North Idaho agent of real estate team here in Coeur, Idaho. We're going to dive into some sticky topics today. So if that interests you, stick around. We got lots of great info. All right, I'm no expert on interest rates. I know the basics, of course, but that's why I brought in the big guns today. I'm going to kick it to Jackie for this one, and she's going to dive into what's going on with interest rates.
Awesome. So interest rates are the biggest topic, I think, in the housing industry right now. And it's really hard because none of us have a crystal ball. If we did, we'd probably be Tahiti or Cabo or something, right? But when it comes to interest rates right now, specifically, what's really driving them is inflation. And we all know that that's a really big topic that's in the news. And they're trying to get inflation under control. And what they've done is essentially they've raised the interest rate for Fed funds. And that's the biggest piece of what drives mortgage interest rate and how many bonds they're selling in the market. And that's very high level. So we'll keep it simple. But at the end of the day, when the Fed meets and when Jerome Powell talks, that really changes the direction the interest rates are going to go. So as of last year, 2023, there was a lot of talk about starting to cut those rates this year. And because inflation is not slowing down as quickly as they had hoped, it is improving, but not at the rate that they'd hoped. They're keeping that rate higher for longer, which is what you're starting to see in the news. Rates are going to be higher for longer. And so what they're watching is that inflation, once it starts to get under control, they may see those rates start to cut, but it's delayed. So it's staying higher longer. They're hoping maybe end of year 2024 to start the rate cuts. But if they start talking about rate hikes, that's where we're going to start to see things get a little more volatile again. So we watch those very closely. It's not impossible for them to increase. It's not impossible for them to decrease, but that's what you want to watch. So if you're sitting on the sidelines trying to figure out where interest rates are going to go, you really want to watch what the Fed is doing with all of that. There's a lot behind it, but that's the biggest piece of it is inflation. So if we start to see inflation go under control, we may see interest rates start to come down.
Right. And do they meet Jerome Powell and they meet like every 45 days to kind of tell everyone what's going on and what they're foreseeing?
Yes.
Yeah. Okay. So that's when we need to pay attention.
Okay. So what I'm getting out of this is that you should trust the government, folks. They have your best interests in mind, and they're extremely competent, right?
Yes.
Okay.
That's exactly it.
That's what I got.
They know exactly how to do things and when to do them. So, I mean, in a long run, to talk about what happened with rates and how long they were low for too long. That really started to cause some problems. So even though it's hard to see interest rates where they are at a healthy level. We don't really necessarily want to see them at 3 and 4 because then investments are not paying out the way that they should be either. So it's kind of a catch-22 a little bit, but 7%, 6% is not an unhealthy mortgage rate.
Right. And I would say from our perspective, when things start getting lower, and I'm thinking, closer in the 6s, things start really moving in the housing market. And when things start moving in the housing market, that's when we start seeing multiple offers and then prices start to increase. And so we got to find kind of a healthy balance. And honestly, that's kind of what we're seeing right now in these 7s, low 7s. But what we're seeing right now is a little bit of a healthier market, right? Where we've got almost 4.5 months of supply of inventory right now, which is very close to a very neutral market. So it's not really a buyer's market, but it's not a seller's market. So if something is an amazing home, super clean in the perfect neighborhood and priced good, like within the market value, then it is going for asking and possibly even more. But if it's not, because that's very rare to have a home like that, then buyers are getting a good deal or a little bit under asking for a home. And so that's a pretty healthy market right there. Like nobody has the upper hand.
Yeah. And that's one of the reasons why you really don't want to wait and sit on the sidelines until they do come down, because people started waiting 2 years ago and now they're so far out of the market that it's incredibly unfortunate. And so One of the biggest issues that we have right now outside of interest rates is really there's so much pent up demand to buy homes.
Yeah.
So the statistic we just looked up is 78.7% of homeowners have rates under 5%. And a lot of them don't want to let that interest rate go. Some of them can't.
It's called the lock-in effect. And if you have a mortgage like we did, 2.7%, you don't want to sell and lose that rate.
Because you'll never get it again.
You'll never get it again. So a lot of homeowners are staying put unless they have a reason they need to, which is creating the inventory to stay at a lower level, which is creating that demand to be higher because there's a lot of buyers out there that want to move and want to move around or buy things.
It's the potential for that perfect storm because we had it wasn't that long
was
ago. It
January.
dipped down into sixes.
It was like January, right?
Yeah.
Yeah.
And immediately Dave's and my phone just started ringing. Like people were like, here we go. It started to feel like it was going to take off. Like it was.
We immediately
2021
started to see multiple offers again. And like I said, it just kind of got crazy. And then the interest rates kind of bounced back up a little bit. And the brakes did get put on a little bit.
And I can definitely attest to the buying pressure up here. Like the amount of phone calls and texts and emails we get from people like you that are thinking about moving here, it's nonstop. It's almost every day, sometimes multiple times a day. So having that, like that, there are that many people out here. And this is just our team here in North Idaho getting that many calls, right? Where there's 2,400 real estate agents in the area. We happen to be the best for sure, but they're out there. So what I'm saying is like, we know firsthand that there is a lot of buying pressure. There are a lot of people thinking of moving up here. And when we couple that with the inventory, I don't know, there'll be a spark, maybe like an interest rate that drops down low. And I think things will take off again here and good or bad, right? That's not necessarily a good thing for people because it makes the market so competitive and then it starts to drive prices back up again.
Right. But we are in a really good place. And that's what I want to say right now, even though interest rates feel high, it's a good place. Our medium days on the market right now is 62. So that means a house is sitting on the market for over 60 days before it sells. So that's creating a little more, well, one, that's healthy, but that's creating like buyers to have a little more buying power here, which is really, really good. And that's also created as we got a little more inventory as the interest rates came up a little bit, it got to build up a little bit. And then it created just a little dip in pricing here, which it needed to do. So I think we're in a good place. So I think personally, if you're sitting on the sidelines, don't. And if interest rates do magically go up, now you're already locked into a lower interest rate. Yeah. And if they magically go down to 6 or 5%, you could always refinance into that better rate.
Yeah, I can touch on that a little bit. We're not just saying don't sit because we want to sell homes, right? We are more invested in our clients than that. And we personally just sold our house.
And lost that 2.7% interest
Lost
rate.
it, right? Because we had a big enough why. And our why was, hey, we wanted some land. We wanted our kids to grow up on some property and, have the goats and the chickens and all that stuff. That's true. So, it was that important to us to walk away from that interest rate knowing we're going into a higher rate. So if you're sitting out there waiting, like, what's your why? Ask yourself that. Do you want to do it or do you need to do it for a job? If it's big enough, then don't sit around waiting for something that may never happen.
Right.
Do it.
But to that point, like we lost that interest rate, which is a huge bummer. But we also were able to get the house that we wanted under asking price by quite a bit and got a better deal on it. If we were waited until, tick down a bit, like would we have got it under asking? Probably not. And we wouldn't have saved, the money that we saved on buying that house.
Yeah. Another question we get a lot, and this is something that people are also sitting and waiting, is the market going to crash? Like, are we going to go into this huge recession and home prices are going to be a third what they are now? I hear that all the time. The only people I hear saying that are the people that are like desperately want to buy a house up here. And I think it's just they're hanging on to a shred of hope, right? So I don't know. You got thoughts on that?
Yeah. So I think a lot of where this comes from is the big crash that we did have
In 2008.
And so if you've watched The Big Short, understand kind of what ended up happening. So back then, they essentially did unstated income and asset loans. And
I was one of those people.
yeah. So you didn't have to, you just said, hey, I make $100K a year and you got the loan. And so one of the jokes in that movie specifically is they're out looking for these homeowners and they knock on the door and it opens and they say, hey, is Mr. So-and-so here? And the renter goes, you're looking for my landlord's dog? Because he did the mortgage under his dog's name. And it was that easy to get more, a lot of people are going to start falling out because they don't actually qualify for these mortgages.
Right.
And really at the end of the day, if you're hoping for the market to crash, you're also hoping for unemployment to absolutely skyrocket.
Right.
And that's a really ugly hope that we don't want to see happen. We don't want to see people lose jobs. But lending practices completely changed after that. So we really verify income, assets. People are very well qualified for the loans that they're taking out. So you're not seeing a lot of stated income. You're not seeing that anymore. People are qualified for these mortgages. And as far as, investment properties, that was a big piece of it. A lot of people had investment properties. Those guidelines are even more strict than they used to be. So, the lending practices have changed so much that I think the chance of there being a crash is highly unlikely unless there's a significant job loss.
Well, and the other side of that is that there's been so much appreciation in home values over the last few years that people have a lot of equity in their home unless they literally just bought a home. So the equity is built up. So even if they get behind in payments, they can still sell their home without losing it to foreclosure.
That's another question that comes up a lot. People are like, hey, send me foreclosures. I'm like, well, cool. There aren't any. So
it's at the lowest I think it's ever been.
Right. And it's because of that, right? Because of the equity of the home. So
right. So if we lose a job or we can't make the payment or whatever, we just sell it and, take the money and go rent or buy a cheaper home.
Yep.
Yeah.
It used to be that people, and if you ever want to watch a good movie, The Big Short's a good one, but they do talk about how people will utilize their home and they took out 1, 2, 3 HELOCs on a home to buy boats, to do this, to do that, because they were having a great time. And so you have these properties that are way over leveraged and then they do end up underwater.
So you're not recommending that you do that. Just noted. Noted. Good. Well, yeah. And, we should bring it up, because it does come up. Hey, the power grid goes down in the US. You got bigger problems than the price of your home. So don't bank on that, because that's a bad world that you don't want to live in. And if that does happen, you should probably just move to North Idaho anyway, because this will be one of the last safe havens in the US, I fully believe.
And appreciation is huge. So, even looking at homes that did go through 2008, they've appreciated significantly.
If you went back and looked at those when things were the worst possible, you would be praying that you would have bought a house back then, even when it was the lowest, because of how much appreciation has happened in that time. So real estate overall, if you're going to be in it 5 years or more, I would say you can't really go wrong because it appreciates over time.
If it's right for your family, any time is the right time.
That's a good way to look at it. And you can always refinance, right?
So will interest rates get 10%. Only time will tell, and then you'll wish you would have bought a house at 7. Yep, exactly.
So to answer that burning question, will interest rates hit 10%? Honestly, we don't know. And if anyone tells you different, they're a liar. Only time will tell. So, and honestly, if they do, you'll be wishing you bought a house now when they're at 7% rather than 10%. So keep that in mind if you're sitting on the fence and waiting. And remember, guys, if you're looking to move up here right now or 12 months from now, I don't care. Give me a call. We will love to get that conversation started and get the ball rolling on that for you. Thanks. You gonna do the finger thing?
That's right, ladies and gentlemen. Bam! The finger gun.